Good morning. This is Arlan Suderman, Chief Commodities Economist at Stonex. As we turn the calendar to the month of June this morning, it's a little before 9 a.m. and coming to you from the trading floor this morning as we look over what the commodity markets are. And it's been an active weekend overall in generating headlines. It started last Friday when President Trump accused China of violating the trade agreement that had been signed on May the 11th. Now, I say trade agreement, it was really an agreement, a cooling off period agreement, rolling back tariffs for both sides to allow some commerce to happen. They didn't go back to zero by any means, but it got them low enough to allow some commerce to happen. And one of the aspects of that agreement apparently was the allowance of rare earth mineral shipments from China to the United States, which we have become dependent upon. Now, President Trump didn't specify that's what he was referencing, but it's broadly believed that is the case, with some saying that we could see a slowdown of auto production within 3 weeks if China doesn't start allowing those rare earth minerals to move. And there's other electronic components that are critical to this as well, including military. And so President Trump wanted to see those starting to move. China is slow walking the efforts to start those moving once again. And I think this is indicative, and this is the bottom line here that I've been saying, is that we're nowhere close to having a trade agreement with China. I think China is watching all of these legal challenges of the president and is saying, why should we negotiate something that reduces our ability to do what we want when President Trump may end up losing this domestically through the courts and through politics and not be able to enforce the tariffs? And if we wait him out, we may not have to give up anything. And so I think Xi Jinping is just slow walking, and I don't expect an agreement with China anytime soon. There may be periodic agreements like what we had on May 11th that buy China some more time, easing the pressure on their economy. But as far as any agreement that gives up anything, probably not anytime soon. If such an agreement were to happen down the road, and I think it'd be considerably down the road, it really could include China agreeing to pay up for more ag commodities as well as energy commodities imported into China in exchange for favorable tariff treatment to access the U.S. consumer market, because that's a huge market for it and it needs that access. It hopes it doesn't have to give up anything to have that access or to regain that access, which it does have now for this 90-day window. But it may not have to give up anything. It waits long enough. That's its thinking right now. And so that's why I don't expect an agreement to buy more commodities anytime soon. Some commodities are starting to move. We've seen a little bit of some pork start to move again at those higher tariffs. There's low enough that we're seeing some of those move. A little bit of beef. Really not seeing any grain and oil seeds or anything like that of any significance, though. As we look at Brazil, it still continues to have very cheap supplies thanks to currency exchange rates and their cheap currency to provide onto the world market. It's basically finished harvesting its soybean crop. It has started its winter corn crop harvest. It's about 2% of that is harvested. That'll really gain momentum here in a couple of weeks. And the yields are really good, and production estimates are going up. And so we're expecting those overall supplies to be there. Now they are increasing their production of corn-based ethanol, new plants under construction, and that'll be ratcheting up over the coming year. So that'll limit the growth in exports somewhat. But overall, that combined with Argentina's production, which is also coming in better than expected as they are actively harvesting their crop, I think will limit U.S. exports in the coming year, especially if the rains start returning and give Mexico a good crop finally this year. Overall, as we look at the weekend news, other than China saying they're not violating any agreement, the other big news story comes out of the Black Sea region, where Ukraine held a massive strike deep inside of Russia, even into eastern Siberia, on some strategic air bases. And it's believed that they impaired 34% of their aircraft designed to carry the long-range missiles, including, if necessary, nuclear weapons, and impaired or destroyed whatever to various levels, took them out of commission. 34% of that fleet, significant setback for Russia. They did so in carrying out a plan that they've been devising for well over the last year, and that included taking these drones, these weapon-loaded drones, and putting them inside of wooden sheds that they could haul on trucks deep inside of Russia. And then when they got near these air bases where they wouldn't be detected by the air defense system, so to speak, until it was too late, where they could remove the roof panels and carry out the coordinated launch. So it was a pretty well carried out plan that President Zelensky oversaw himself, according to some reports. Russia shortly thereafter launched, and it's being reported as a retaliatory strike. It may have been retaliatory. They may have been planning it anyway, coincidentally. But regardless, 472 drones sent into Ukraine, mostly targeting Kiev. It was the biggest drone strike on Ukraine since the war started in February of 2022. The peace talks start in Turkey today, the direct peace talks. It's not unusual for both sides of a conflict to step things up right ahead of the peace talks to help improve their negotiating position. But this really makes an agreement unlikely. And Russia, frankly, is showing little interest in an agreement. But what this escalation does is it further escalates ever so much the odds that we could see movement of commodities out of the Black Sea region curtailed. I would say those odds are still below 50%. Don't get me wrong. I think that the market is still assuming that commodities will continue to flow, but the risks are slowly escalating. And that's helping lend some support to the corn market, lending some support to the wheat market, lending some support to the crude oil market. Now, in crude oil, as we look at it, OPEC Plus met virtually over the weekend, and they agreed to increase output for the month of July by 411,000 barrels per day. That matches the increase for June, and then matches the increase for May, and that followed a modest increase in April. The reason given has been that they want to punish some countries that have been cheating on their output quotas, but it's really now openly being discussed that this is a taking advantage of an opportunity to re-grab market share. Many of these countries have been trying to curtail production output, trying to push prices higher to support their oil-dependent economies. But all that had done is shift market share to the North American shale oil fields. Those shale oil fields have higher cost of productions. And so now at a time when oil prices are dropping near the break-even levels of those cost of productions, these countries are saying, okay, we haven't been able to support our economies by curtailing production because we just saw increased production from the shale oil fields. How about if we go for volume? And so they're now trying to get greater volume to increase their revenues, albeit at lower prices, while re-grabbing market share away from the North American shale oil fields. So as a result, this morning we saw crude oil, WTI crude oil, trading up near the $64 area. That's approaching the top end of the range that we've seen over the last couple of months. And so now we are seeing it, as I talk to you now, a little bit of profit taking, a little bit of selling come into there, but that's provided support. And the fact that OPEC didn't raise their output more, as had been rumored, combined with the increased geopolitical tensions from the Black Sea region. Soybeans continuing to see a little bit of weakness here. Soy, although getting some support, continuing to wait for those RVO and small refinery exemption announcements to come out any day now here over this week, next week. It's expected it could be at any day now. The process is definitely moving along through. If you want to continue to receive these updates from the trading floor, click that subscribe button, and we'll continue to bring this news to you. Thank you.